Hi guys, welcome back to my channel. Kelvin here. If you are not living under the rock or something, you may have seen or even joining what happened recently in the stock market, and that is the GameStop saga. If you haven't been following the event and took a look at the stock chart, you may think that it's just a normal pump and dump event. Well, yes, but no, it is much deeper than that. So in this video, I'll be bringing everyone up to speed on what has been going on, what will happen. Then I will talk about what should you do and what I learned from this whole saga, which by the way is not over yet. It is still ongoing as of the time this video came out. So let's not waste any time and let's jump right in. GameStop is an American retailer where you can buy and trade in your video games. If you are born in the 80s or 90s, you will know that this is a thing. The only way we can get video games is go to a shop to buy. Like, I remember buying pirated $10 video games 20 years ago. And the store that I always go to looks so shady. Fun times. As you might imagine, this brick and mortar strategy isn't doing so well now. Everyone can just buy and download video games online nowadays. As a result, GameStop business was slowly dying over the years. So much so that this caught the attention of hedge fund managers like Melvin Capital and Citron Research. If you are unaware, hedge fund managers are just fund managers who help their clients manage their money, and they use really complex strategies to invest. If you check out one of the hedge fund, Point72, you will see this on their website. We invest in discretionary, long, short, macro and systematic strategies. So here's what it means. I have no idea what they are talking about either. Anyway, all you need to know is that they have access to billions of dollars. Whatever they decide to buy, it will go up. Whatever they decide to sell, it will go down. Many consider this as market manipulation, which, by the way, is legal. Hedge funds are the whales of the stock market, and people like you and I are just small fishes, hoping that we don't get eaten up by the whales. So, back to the story. GameStop's dying business caught the eyes of Melvin Capital, and they decided to do what the Hokkians like to say, 好意思. So, Melvin Capital started shorting GameStop stock. You may ask, what is shorting? 可以吃的吗? The idea of shorting is very simple. It is totally opposite to what most of us are doing. Most of us will first buy a stock, then wait for the stock price to go up. Then we will sell the stock for a profit, right? On the other hand, when you want to short a stock, you first borrow the stock from someone, then you can immediately sell the stock to someone else and receive cash. After that, you pray hard that the stock price goes down, so that you can buy back the stock at a cheaper price. Then return the stock back to the guy who you borrowed from. So that's shorting a stock. Sell high and buy low. Back to the story. Melvin Capital decided that GameStop was a failing business and started shorting GameStop stock. As you may imagine, the stock price started dropping and dropping. Many hedge funds saw this and say, hey, I can whack big by shorting GameStop leh. Let's join in. And soon, GME stock was under attack by multiple hedge funds. So much so that GME was the most shorted stock currently, much higher than the rest of the stocks. If you look over here, you will see that the short interest for GME is over 9,000, just kidding, it's over 100%, which meant that the amount of stocks shorted is more than the amount of stocks available. Now, let's introduce our next character, WallStreetBets. WallStreetBets is just a forum on Reddit where people discuss about stock ideas. But WallStreetBets is a little special. They like to call themselves degenerates. Like the name suggests, these people like to bet their money on Wall Street stocks. They will go all in on stocks and options and will either win big or lose their entire life savings. Like this guy, DFV, who invested $50,000 into GameStop, a dying business in 2019. So anyway, some Wall Street Bets people noticed that GameStop had an unusually high short interest, and he told everyone his thesis. And basically, what he said was this. 来，我甲你讲，林北说 GME got a lot of people bang. If you all buy the stock, we can squeeze the balls of we can cause a short squeeze. What's the short squeeze? Remember the earlier example about short selling where you sell high and buy low? But when people buy up the stocks, it will cause the stock price to go up. To prevent losing money, the short sellers will have to buy back the stocks to close their positions. And when they buy back the stocks, this will actually cause the stock price to go up even higher, which will then attract more people to buy the stocks, which will then cause more short sellers buying back the stocks, which would cause the stock price to go up even higher. And this whole repeats itself in a recursive loop. So that's a short squeeze. And that is exactly what happened to GameStop. Many Wall Street Bets people decided that they want to punish the hedge fund managers. So they band together like the Avengers and bought out GameStop stocks causing a short squeeze. GME's stock price went from $17 in 8 January all the way up to $500 before coming down to $300 last Friday. That's more than 1,700% increase in less than a month. To put things in perspective, let's say if you work at Sheng Siong as a cashier, so your pay is like $1,700, and your boss suddenly gives you 16-month bonus, that's $27,200. Now, let's say you take that $27,000 and all in on GameStop in 8 January. As of last Friday, your $27,000 will become $489,600, allowing you to buy a 3-room HDB with cash. So anyway, back to the story. GameStop stock price went straight to the moon, and that's when things get really interesting. Remember our hedge fund managers? On January 26, it was reported that Melvin Capital lost $2.75 billion from this. Their investors had to give them money to continue the shorting, otherwise they would just go bankrupt. And how did WallStreetBets responded? They'd be like, the group of 6 million people bought up even more stocks, causing the stock price to jump 300% in just one day. This attracted a lot of investors who joined in the fight. Let's take a look. In the end, the $2.75 billion evaporated. Melvin Capital and many hedge fund managers gave up and closed their short position at a huge loss. Oh yeah, remember that WallStreetBets guy who invested $50,000 in GameStop? He accidentally became 40 million richer as of last week. Throughout this whole saga, a few more sagas happened. First was WallStreetBets started targeting stocks which had very high short interest, like AMC, Virgin Galactic, Bed Bath & Beyond. These stocks all went straight to the moon last week. This caused a ripple effect to many other unrelated stocks. Like Malaysia's version of WallStreetBets, BursaBets decided to pump up Top Glove. Dogecoin went up 370% for absolutely no reason. Even a totally unrelated stock, GME Resources, went up by almost 100% last week. Meanwhile, a second and more sinister saga was happening. Many brokers like TD Ameritrade, Charles Schwab, Robinhood, and Interactive Brokers blocked people from buying GameStop. Many of them cited liquidity issues, saying that they had to block people from buying GameStop to protect the market, while Robinhood said that it was to protect the company and the customers. Meanwhile, WallStreetBets are accusing that Robinhood are protecting the hedge fund managers, because if you can't buy the stock, then the stock can only go down. Personally, I do not know what's the real reason behind this, and I think that it is better that we let the authorities find out the truth. Third, a lot of people are questioning whether what WallStreetBets are doing is right or not, and whether these kinds of groups are illegal or not, because they feel that what WallStreetBets are doing is market manipulation. Are they doing market manipulation or not? Again, I don't know. What I know is that hedge funds have been doing this all along, and the authorities seem perfectly alright with that. So again, we have to see how this all turns out. Now that we are finally up to date on the latest events, what should you do now? Should you join in and buy the stocks, or should you stay on the sidelines? Here's my non-professional advice as a guy who is still learning about investing. That's why you shouldn't listen to my advice at all. But here's what I think. Obviously, you have two choices. First, you can either stay on the side and eat popcorns while watching the drama unfold, or you can buy in. If you decided to buy in, I have to warn you that this stock is extremely volatile. It can easily go up 300% or go underground 18 levels where all our ancestors are. Even though on the front, the WallStreetBets people are saying that they are doing this to punish the hedge fund managers, but I got a feeling that a lot of people are doing this mainly for personal gains. If you want to go in with the expectations that you will lose a lot of money. If you want to make money, this is the wrong stock to be in. There are so many more good stocks that can give you good returns with so much lesser risk. So what did we learn from this saga? First, all of this will definitely go down in history, and I believe that this will lead to a lot of changes, because for the first time ever, the retail investors or the dumb money are beating the smart money hedge fund managers at their own game. and the authorities are starting to question whether what hedge funds is doing is legal or not. Second, I think that it's good to have a few brokerage accounts available, just in case one of them decides to go against you, causing you to miss out on gains or even worse, lose money. Third, and the most important of all, WallStreetBets have shown that they have the power to move markets. GME wasn't their first stock. Before that, there was Palante, Neo, and many more, with 6.5 million members in there. I think that this is entirely a new phenomenon, one that we shouldn't underestimate. Should you follow the trades to make quick money? It is totally up to you. But if you do, know that this is mostly gambling. And with most gamblers, you either win big or lose a lot of money. And that's all for today. Are you invested in GameStop? What do you think about this whole saga? Let me know down in the comments below. Like, share, and subscribe as I'll be posting new videos every Monday and sometimes Friday.